Hello guys, it's June 24, 2020. It's already Wednesday and you're listening to Nikki, you also known as Faces Trader here in our awesome 10X channel. Magandang umaga. I like to share what happened to the Philippine market today, but let me start with reading the news. So there's a lot of news to uncover. I'll read it for you. Headline, Cebu Pacific cuts more jobs June 24, 2020, idled planes. These planes parked at Ninoy Aquino International Airport Terminal 3 are part of the 76 aircraft fleet of Cebu Pacific, the country's biggest budget airline, which had been poised to fly its 200 millionth passenger this year. However, the airline is shedding more jobs to survive because of the coronavirus pandemic. Cebu Pacific, the country's biggest budget airline, is implementing a second wave of job cuts as it fights to survive the new COVID pandemic that is sweeping the globe. As Inquirer said, the layoffs would affect about 30% of the carrier's 4,000 employees and would be implemented early next month. We're talking about 1,200 potential unemployed. A Cebu Pacific spokesperson confirmed the job cuts but said details had yet to be finalized. The right sizing of Cebu Pacific will be necessary to fulfill our commitment to provide affordable, accessible, and available air travel and air transport services to everyone in the years to come. The company laid off an initial batch of 190 newly hired cabin crew members in March. The latest reductions will be across the board, including cabin crew, like flight attendants and pilots. Employees were told that the manpower reduction would ensure the revival of Cebu Pacific, launched by the Gokongwei family in 1996 with a fleet of 4 McDonnell Douglas DC-9s. Country's biggest airline by domestic market share, Cebu Pacific today has 76 planes. Expansion goals have been scaled down and placed on hold as COVID-19 severely impacts the demand for air travel. The layoffs at Cebu Pacific would add to more than 2,150 aviation jobs lost or slated to be cut since February, such as the 300 PAL workers, 1,400 at Aviation Ground Handling Services Corp, and 260 at AirAsia Philippines. Cebu PAC is undergoing a transformation process with recovery not expected for another 2 to 3 years. Apart from cutting costs, airline implemented a sweeping review of its long-term expansion, including the acquisition of 61 next-generation planes until 2026. The new approach will ensure the long-term sustainability of the business given the expected changes in travel demand and consumer behavior. We expect travel recovery to happen over a long period, impacting the aviation industry. The problems are linked to confusing government regulations and the lack of COVID-19 testing. Inconsistent guidelines have marred local air travel after strict quarantine measures were lifted on June 1. Airlines have since warned passengers that schedules can change day to day as local government units tighten restrictions. Among domestic airlines, only PAL has restarted overseas travel subject to limits set by the government. Outside the Philippines, global carriers are also struggling as demand falls and countries relax and tighten lockdowns, while new COVID-19 hotspots emerge. Bailout, US and Germany have chosen to support their airlines with multi-billion-dollar bailouts. Cathay Pacific said it will receive $5 billion in a state-backed lifeline. The Philippine government hasn't extended any similar support to local airlines such as tourism. So job losses from these two crucial sectors could reach at least 500,000 for 2020 alone, according to International Air Transport Association. The various stimulus package that should prop up important businesses such as airlines were not certified as urgent by Malacanang. Instead, President Duterte gave priority to a controversial anti-terror bill that is now awaiting his signature. Finance Secretary Carlos Dominguez III previously indicated that state-controlled lenders could be authorized to make investments in companies critical to national interests that are now experiencing solvency problems. So that is one news that you have to know. Let's read more, no? The Philippines is feared to lose $6 billion remittances. So the Philippines stands to lose up to $6 billion in remittances this year as global economy might render about 400,000 overseas Filipino workers jobless, said Senator Joel Villanueva on Tuesday. Villanueva, who is the Senate Labor Committee chair, said the government should immediately intervene and come up with a comprehensive plan to help nearly 50,000 displaced OFWs who has already been repatriated. He cited the need to conduct a labor audit to determine how many Filipinos, including migrant workers, would be displaced by the contagion and how the government could help them. We want to know the situation of the OFWs. From what we have seen and heard in social media, they're really suffering. Every day we hear an average of 100 complaints from what we call modern heroes. Do we really treat them as heroes? From what we're seeing, their situation isn't good. The senator noted that Ateneo Center for Economic Research and Development had already warned that OFW remittances this year would drop by about 20% due to the pandemic. Last year, OFWs sent more than $30 billion to their families, or about 9% of the country's GDP. How will it affect the economy? The government should help OFWs keep their jobs or find a way to get new jobs without having them return home. So a lot of bad news on your headlines. You could see that right now, the palace is allowing UV Express, not the jeepneys, to resume operations. There's also this news in terms of a little positive news. You've heard me say that cheap bonds are happening globally with Jollibee and PLDT and ICT having successful bond offerings. Right now, Philinvest is studying the bond and equity offering as well. Philinvest Development Corp is planning to raise capital through debt and equity measures in local and offshore markets. FDC President Josephine Yap said the company is trying to support business expansion. We are reviving our bond offering now that the lockdown has been lifted. We're evaluating to float either peso or dollar denominated bonds given the attractive rates. FDC is keen to raise equity and share it to the public. FDC's public float is 10.8% at present and is just waiting for the right timing for an offering. So an offering means that FDC will increase the public float probably from 10% to about 15%. I'm not sure if it's 15 or higher, but the bigger the float publicly, the better the liquidity. Now, FDC has set its budget to be 25.7 billion pesos, intention to use to support expansion and diversification effort. To maintain this posture, it's imperative to strike a careful balance of equity and debt. Company's equity stands at 132 billion pesos with its net debt to equity ratio at just 0.54 to 1. During the first 3 months of the COVID pandemic, FDC continued to earn money, posting an 8% increase to 3 billion pesos due to the growth of East West Bank with 2.3 billion peso contribution, higher by 75% from last year. So despite the continuing rise in the bank, FDC needs to be more cautious and adopt a more flexible short-term process while still being mindful of the medium-term strategy. Focus will be strengthening the recurring income such as power, office, and logistics leasing, and new investments in renewable energy. Our strategy is to optimize our existing asset base, leveraging on digital and technology to answer to the changing needs of the market. FDC plans to recognize income of about 15 billion pesos from a multi-tower mixed-use complex in Philinvest City by the second quarter and completing the 64-hectare Phase 1 of Philinvest Innovation Park in New Clark City by the second half. Our disciplined and strategic approach to financial management has prepared us for this current global health and economic crisis. Resilience of our management team and experience surviving all kind of crises have provided us some valuable insights. Shares in FDC closed about 2 centavos or 0.25% lower at 8.10 apiece on Monday. So let's go to the charts of FDC, Philinvest, and East West, the 3 companies that are mentioned in this news. Some news pa before we go to the charts. Manila Water and Maynilad customers na dismaya sa mga lumobong water bill. As you could see here, nadismaya ang mga tao nang matanggap nila ang bill sa tubig dahil umabot sa higit 18,000 pesos ang singil ng Manila Water para sa 3 buwang konsumo. 3 pamilya na naghahati ng tig 60,000, gayong 4,000 lang ang pinakamataas nilang buwanang bill bago ang coronavirus lockdown. Ayon kay Sir Francisco, hindi nila kakayanin ang bayarin na to dahil wala namang trabaho noong lockdown. Nagulantang din si Desiree Picog sa 15,000 bill sa tubig mula sa Maynilad. Bad timing daw ito, wala nang trabaho ang mister. May paliwanag naman ang Maynilad at Manila Water kung bakit lumobo ang mga bayarin sa tubig. Una rito ay tag-init at ikalawa ay dahil sa quarantine, nasa bahay ang lahat ng miyembro ng pamilya kaya lumakas ang konsumo sa tubig. Tinayak naman ni Manila Water Mr. Spokesperson Jeric Sevilla na ang kanilang bill ay base sa basa ng Metro. Ayon naman kay Maynilad spokesperson Zimel Gravillo, dahil po sa lockdown, mas malaki talaga ang nakonsumo nitong mga nagdaang buwan kumpara po noong ibang taon. Wala rin isinama sa bill ng Maynilad na hindi nasukat ng Metro. Nauna nang sinabi ng parehong concessionaire na hanggang July 31 para bayaran ang pautay-utay na bill noong lockdown para sa mga konsumo na lumagpas ng 10 cubic meters kada buwan. Ang lifeline user naman o yung 10 cubic meters ang konsumo kada buwan ay hanggang Agosto 31 para mabayaran ang bill na pwede ring utay-utay. So as you could see, consumers are actually having a hard time with their water bills right now with the loss of jobs. Lots of news, no? One news that I needed to share is BDO is of course buying the Nomura. And of course, if you have heard about East West, they have written here that they are not for sale. A lot of press releases have been giving rumors, and that rumor was quashed by the company itself. In fact, in an article, East West said that they would rather be a predator rather than the prey. Predator meaning they will be the one being the one eating rather than being the one eaten. We've been getting queries from media if the rumor on East West is set to be acquired by another bank is true. No, this is not true. FDC is not in any discussion, nor does it plan to even have a potential sale of East West Bank. There's been speculation that we are in talks with banks or merging or acquiring an FDC subsidiary. East West Bank is, of course, one of the pillars of FDC. We remain very confident with the high performance of the bank, and we continue to sustain the track record to be one of the most profitable listed universal banks in the country. FDC, which is the controlling stakeholder of East West, is one of the country's biggest business conglomerates. And for the conglomerate to let go of this highly profitable business doesn't make any business sense. We're poised for another record year of profits, said East West CEO Antonio Moncupa. With inflation under control, adequate market liquidity, interest rates going lower, these lower rates will magnify East West's advantage of being business and consumer focused, further enhancing its margins. Take note that East West is a consumer-led bank with a lot of their loans through credit card, like auto loans, like a credit card bill, together with this improving deposit structure from the growth of lower cost current and savings accounts. The bank is looking forward to sustain its top position in profitability. For the last 3 years, East West has ranked an impressive 1, 2, 3 profitable position in banking industry in return on average equity from 2017 to 2019 respectively. And even the first quarter of 2020, East West Bank became number 1 as the most profitable listed universal bank in terms of ROAE, return on average asset equity. So East West record, due to the fruit of the seeds it has planted in the last few years and improving economies of scale, means that as the bank has grown and have started to mature, better gains, lower interest rates, better deposit structure. In the last few years, there have been a number of queries, both from local and international, if East West is open to take new investors. I guess some sectors are attracted to East West's unique business model and consistently high profitability record. But no, we think that we will better serve our customers and our stockholders as being an independent company. So this is to quash all the rumors on East West Bank being up for sale. Lastly, just earnings. Chelsea Group swings to a net loss on flat revenues. June 22, Chelsea Group's first quarter revenues was just up 1% to 1.6 billion pesos. The first quarter heralded the start of the traditional peak season, but the group's financial performance was severely impacted by COVID-19 and the Taal volcano eruption. The group shipping business reported 2% increase from 1.48 to 1.5 billion. Passage business revenue rose 39% from 300 to 400 million due to the recent consolidation of the Supercat Fast Ferry Corporation, serving new routes and more passengers. Revenues from tugboat operations grew by 6% from 82 to 86 million. The logistics business posted a 10% decline from last year's 100 million to 106 million. The revenue decline was due to the restricted movement caused by Taal volcano eruption and the government-imposed ECQ. Operating profit for the quarter declined to 40 million from the 381 million pesos it earned last year. The 90% decline due to the ECQ, which is actually the start of because mid-March is historically the start of the shipping industry's peak season. Chelsea President and CEO Chris Alfonso V. Damoy remarked, "We are certain that our capex will bear fruit going forward. In the pipeline, we have investments which are expected to generate significant cash flows. There are 2 vessels to be delivered this year. 2.5-hectare logistics warehouse will be completed next year. We will soon be seeing infrastructure, seaport and airport modernization projects in Davao, making meaningful contribution in the future and additional revenue streams, which are vital to the Philippine economy." So Chelsea, of course, is the fastest growing shipping and logistics company in the Philippines. This isn't a very good earnings front from Chelsea. So now let's go to the news, to the charts naman. Isa-isahin natin yung mga charts. Wait up, guys. So here, for the day, you could see that the index is a bit muted, 6 billion pesos. You've got 83 advancers and 121 decliners. However, the volatility went to many speculative names. You could see that Philex Petroleum had a third-day rally to as high as 740. Let's go to your most actively traded. Your most actively traded, about 10,000 people, 10,000 trades for Merry Mart. So there was a drop, profit taking after hitting near 4 yesterday, down to 350 ngayon. You see MPI continues to go up. It actually moved as high as 390. Your Macro Asia made a spectacular jump, 16% from 6 to 7.1, 5,000 trades. Your PXP actually hit 750, 5,000 trades there, and then fell down to the close at 680. But that was a 50% run in 3 days. So it looks like actually Nickel Asia actually also rose to 195. There are chart-wise, I think you're seeing that the market is going to a lot of illiquid names. What used to be illiquid names that's getting a lot of liquidity, no? So let me share to you a few charts. Let's go for the daily. So the market so far, yesterday we saw this strong rebound at 175, and Nickel Asia did follow through. You have seen this resistance at 220 and 240. So this is your first resistance, your ECQ, GCQ time, your ECQ time. Now, you're seeing that Philex Petroleum in the last 3 days rallied to about 50%. That would be 750. Some people took profit, but that doesn't mean that the momentum is over. As long as this name continues to trade above 6 pesos, this could still go higher. However, take note that the resistance could be somewhere here at about 8 to 10, or that could be the resistance because the first red signal after a 50% rally. Let's talk about the news, FDC. So FDC isn't being traded, but given the talks that the company wants to issue a potential, equity offering, try to remember that there is a strong support on FDC at these levels. So you've got a monthly support at about 5 to 7, around 6 areas. So in fact, there was a strong consolidation here. From 2016, it went from about 4 to 8. Given a potential equity offering, it might make sense that Philinvest Development could see a lot of liquidity coming out within the next few days or months. Might have to check how it goes. Now, of course, if FDC is going to have a publicly equity offering, it might be helpful for their individual names. FDC owns Fly, Philinvest Land, and it also owns East West Bank. These are profitable entities, and so people might actually see that these names could rally a bit. You've got resistance in your ECQ time here at about March. So it was trading at about 120 to 130. Lots of resistances would have to be proven to be executed on a selling mode. It will take time, but if this is a recovery play, we are seeing a higher low, 90 cents, possibly 1 peso, and then 110 is a higher low. So what you are seeing here is that you are seeing this is a deep decline. Stage 1 is always a deep decline. Stage 2 is a shallower decline. So as long as it's shallow decline, you are seeing higher lows already for this name. We don't know if this higher low would be 97 cents or will it be higher pa. So this is the first low, 77 cents, then 90 cents, 97 cents. Is next resistance 110 gonna be the support? That's also possible. So it takes time, but that is how bottoms are happening. Takes a while, months and months. The news, of course. Okay, so macro Asia went up. Macro Asia, I think, is more of people's hopes. As you could see, the airline sector is in a very difficult sector. You should be able to see resistances in macro Asia here at about somewhere here at about 8.75 to about 797. So those who are in this position, we said that we saw some airlines worldwide actually being bought. And so we see that people are playing this reopening theme, even if air travel might take 2 to 3 years. So there are people who are serving the future, no? So so far, this is a strong run up. This is your first resistance, your previous 746. If this continues to stay above your 6.5, I'd say that the momentum is continuous to be up with your resistances still at about either 12% higher or even a third day as high as 875. So like as nobody will expect, usually what you call these names are, it's a bit of a rare occurrence, no? Black swans happen both on the downside and on the upside. Just as nobody predicted that the airlines can recover because the consensus 2 to 3 years. If that happens to be not 2 to 3 years, let's assume that they can recover in 1 year. The stocks would go higher as long because the bad news is usually priced in for all of these bad sectors. So, for instance, Cebu Pacific shuts down, closes their airplanes, fleets, and cuts losses. So basically, they cut jobs, so they would lose less money in the future. The market could see it actually as a good thing instead of a bad thing. Take note what happened when BPI actually laid off. I think they laid off 20% of their workforce. It was a news somewhere in the May. You can find the news on BPI. Since that hard bitter pill of cutting those jobs, laying off people, BPI actually managed to rise from about 64 to as high as 80. So actually, sometimes the layoff, the cutting of jobs is seen by the market as a better news. So example, let's say Jollibee, they cut down their capex, they closed down some of their stores. It would be seen more by the market as a positive thing rather than a negative thing. Actually, Jollibee's first quarter loss stemmed about because they retained all their employees. It's two things, actually. I'm not saying that preserving jobs is more important or cutting jobs. I'm not talking about the jobs per se. We know that it's tough to lose your job. And that's what's really happening worldwide, not just in the Philippines. So, but then again, the market is not always looking on how many millions of jobs, unemployed, etc., etc. The market is thinking of what's the future like in the next few years. If Jollibee was able to borrow $600 million overnight in the global bond offering, that means that your first support, your first inclination here should be that you have support at 130 and even here at 110. While you may have seen this double top resistance at 151, it doesn't mean that 151 is your real resistance. If the market can continue going higher, then you have resistances more in the level of 165 or even 185. So these are, we're seeing that the GCQ is a way for the government to help all of these heavily restricted, of course, like the social distancing measures are really having a hard time for companies like these. This is true for restaurants around the world. But if the companies are able to translate a cost-benefit reduction, either by cutting jobs, closing down stores, lowering down their capex, or just basically streamlining the company, those can be seen as a bull and bear tug of war. So right now, I'd say that although yesterday the market was very much in the upside, today it seems as if some names went up, but some names actually fell. So we have a mixture. We've got the markets. The market is a bit speculative. Wait up, guys. Where is that? So the market is still speculative. The fact that you've got top gainers in your, you've got your gainers. A lot of them are in the speculatives. These are mostly small caps. You've got Max 16%, Mega Wide 14%. These were your MSCI plays. MSCI deleted and continues to run up. Remember that mining plays like PXP, nickel, I think even APX also rose. So you're seeing that the market is willing to trade your speculative names. Teka, let me see. I think even tech went up and then fell. Okay. Still though, it's being traded. Quite a range. So it rose. Third day, fell down. Okay, so you want to wait if it goes down to 105, what people will do. So I think like in general, you see that the bearish headlines are strong, but you'll have to take a look what the market is really doing or whether the market reacts. Today, you've got 2 billion peso foreign selling, showing you that index-wise, you've got a lot of tough bears selling your market. There are bears who think that this 6.6, 6.5, 6 states, even if it goes 7,000, they would be selling on rallies. So nothing wrong to lock in gains because if you've made some money, you don't want it to fall and evaporate all the way to about 5.8 index if that were the case. So you've got two scenarios. I think there's bulls and bears. But this is going to be a climb, a wall of worry. It's a wall of worry climb. So there. Thank you guys. Bye-bye.